I just want to do this view of the market from a volatility standpoint only. So if all you could see was the amount of movement per bar. So what I did here was I took the ATR, which is the average true range, is inside of your platform. So I just went in here and I took the insert indicators, and I'm going to go to average true range. The directional movement, I don't know if that works or not. I think if you traded breakouts, maybe the direction. The alligator, this is Bill Williams. This is kind of from stock market days, I think. This is the accelerator oscillator, momentum, I suppose. Volume. Here's Bill Williams himself. Here's all this stuff. The alligator again. I guess this is the greatest hits up here. But average true range, and then what you do is I set the levels to 0.005. In this one currency, Australian dollar, just so happens to be that is 0.0002 is 2 pips. So to look at 10 pips here, it's going to be 0.0. You plug in the levels. This is going to be 0.00. So this is going to be 10 pips here. But I set this up as Fibonacci so that I could cure the Fibonacci fetish. That some people have a Fibonacci fetish, I think. But it's just a way to keep you from, this is designed to keep you from overindulging. You know, you notice a lot of the stuff that people are doing is kind of built on a premise of, well, you know, let's be serious about this, people. Don't just trade on your gut. And the gut trading, or beginner's luck, or just people that say, oh, look at. Now, of course, that's all dependent on the fact that if you're not aware of the volatility, it could be an issue because you'll be making a lot of money. Happen to be in a position that's twice as large. All you have to go is from a 1K to a 2K. You're making twice as much money. But the market dynamics, which you can see here on the ATR, I set the ATR to 1, so I would call it a TR. It's just true range. I don't know if there's probably a true range bar in there. And instead of picking the line, I just picked the histogram because it just gives me a count of each. So now you're coming up on a volatility breakout on the Australian dollar, obviously. And if you want to cherry pick the chart and look for all your entries below the famous, right in between 13 ATR. So I said these are Fibonacci. So you're looking for all those entries. Now you might have to scan the time frames to get the entry you want, because each of these things goes nuts, and there's only so many opportunities per. So here's say 2 bars that if you add the spread onto this of say 2 pips, you go to your vertical line here and drag this over till you find the lowest bar on the bottom. And it looks like volume in a way, because when the market goes nuts, there's typically volume, but there can be volume spikes when the market's quiet. But this is way more, and I set this ATR to 1. So if you go to the ATR starts at 14, I don't know where this 14 number came from, but everything's default to 14. ATR here, I call it HG for histogram, and I actually fattened up so that my period is 1, because the moving average is 1. So I want to have everything cut right to the edge of this miter box I'm running, and just have everything's right to the apex of the breakout of the triangle of the blah blah blah. And those trades are definitely viable trades. A breakout strategy totally works, but you have to have it in conjunction. I think you can't just live off of, because they're going to chop you to pieces. Now, if you had this scanning on 10 currency pairs, and maybe you got 4 currency pairs on one broker with a breakout button, you can make money like that, right? It's just like having a store where you branch off and now there's a spin-off, there's another store. Sure, you know how to trade. Everybody can trade from a gut feeling. Like, especially if you buy or sell at the market, and as soon as you're wrong, you say, "Fuck, I knew that." I mean, like, you're like, you're like, even when you pull the trigger. See, that's the problem with trading at the market. It's very unplanned execution. I don't hear anybody talking about how they get in these markets. Everybody's like, "Oh, you get in here, I'm like, "Yeah, but is this stop? Is a limit? Did you let that thing unfold? Are you going to get in here and hold on for dear life, or are you just going to take whatever?" It's kind of like a big, when the market makes a big plunging move. It's like if I was at this party once, and this guy dropped a whole plate of spaghetti, and these two dogs, without any manners, jumped in and started eating it. And kind of reminds me like that. Like when the market plunges, not only the people that sold that plunge from the quiet breakout make money, but when the feeding frenzy comes in, and there's people on a 6-second chart making a living during that phase, because every time they see that window of plunge, they're like, "I'm getting on that." And the thing is that if you're one of these, like I said, you're one of these conservative people, like, "Well, no, I'm very plotting, and I've looked at the fundamentals, and I got a Gartley," and I'm like, "Okay, maybe you got 3 trades a year, and maybe that's okay, right? Because you made so much money those 3 trades a year." And so I guess this nobody's going to ever agree on style, right? Maybe you want to, I don't know how long you can handle being with somebody, but I guess my limit's pretty tight. The thing is, you reach this threshold with somebody where like, okay, well, it's game over. Like, if that's all the moves you have, like, I got to move on. No offense, but we gotta break up. But the thing is that, some people aren't meant to be around other people. So but you just find a niche, right? So I guess I'm into the trading thing, but I don't really want to, every time I go out, like just in the car, people are tailgating me. I'm like, I want to get this digital, okay, here's a idea out there. Anybody wants to make some money in the real world, you need a digital sign on the back of your car that you can change the marquee. I just saw one on a bus that had a smiley face, and it said 1, and I think it was bus number 1 with a smiley face. I want a digital marquee. Actually, if I see this out there, I'm going to sue you, but this is Yosemite Sam on the back of your car, and he's saying back off. Like, you just have a little button on your dashboard. But then I was talking to this kid that was 30 years old, and he said, "Hey, you know what you got to do is you got to have like just an app for that. You download the latest catchphrases, you put the latest memes on the back of your car." Because I think you're probably going to get a ticket. I don't know, distraction of driving. But that's a real world idea. But the Forex thing is funny because it's like you're looking at this opportunity that literally takes nothing more than a click or a pre-placement of an order, and it just seems kind of insane. And of course, I'm going to cherry pick this chart here and show you all the opportunities you missed. Now, if you had a robot, and hopefully somebody out there is built a robot already, and this is I call it the fib. The ATR fib bot, but I call it TR. I just call it TR bot because I'm not averaging anything here. This is just raw dog, and I'm going all the way to 114 on the fibs. So if I get out big enough, one of these pairs is going to hit the. Here we go. So look at this thing perfectly, and look how the Fibonacci. Look how it respects that 89 pips right there, dead on. See how that works out? That doesn't get any better than that. Look at this. See? 55, 89, 144. Don't you love that fib? Now, this is what the order should look like when the only point of this Fibonacci, in my opinion, is the ratio. There's a book out there by Tony Plummer. He's a British guy. I think I paid $50 for the book. It's all of 60 pages. But what he's doing in there is he's saying, well, I got in here, and I know this kind of range is available. So only if this was a scalp, like I'm speaking from, this is a narrow bar, you get in, maybe you get chopped, you make it to this yard line, but all of these levels are important as far as you scaling out. Look at this premium opportunities where the market came into an insanely, just for that moment, So you can't just get in willy-nilly. I mean, if you have breakout strategies, you can, I mean, at this point here, on this day, maybe on the smaller time frame. So if you want to trade a lot of pairs, and you're going to trade a breakout strategy, you probably are going to want to have a radar panel, like say just a, take a demo account and donate it to all the pairs you want to trade, and then pick a time frame, and then just say, okay, well the ATR is low. Who's got the lowest ATR for? Now this also is because everybody has this different view of what a pip is. And I see this, I watched this guy called, he's got this So Darn Easy guy, but he actually counted pips like this. He went like this, market goes like that. He's like, okay, well, since I sold 3 tickets up here, and this just moved down 100 pips, I'm up 300 pips. I'm like, really? But what is the way to get around this? So some of the filters here, this is just nothing but a non-directional filter. It's like looking at volume, but it's way more dynamic. Look at this dip into here. So how many times do we dip into that? So these are your only entries. You're also reducing your trading. Look at 2 in a row here. I don't know what's going on here. It could be the holidays here. I don't know what's going on. And then what can we expect after we see how, if this happens rarely, then here just below the 8 pipper. This is 8, 13, 21. No, wait. Those are way down here. So it's like 8, 13, 21, 34, 55, 89, 144. So if you can imagine your orders looking like this, if you drop a script, you have to take Fibonacci and create some kind of spreadsheet. So if you plug in how many pips you want to make, you'd see the, but you're imagining the market's going to do one of these things. So you actually want to buy more at the bottom here. You're loading up. Now if the market crashes through, I'm imagining that these are your stops and not relating this. I'm just all of a sudden just made these buy limits. But now the same could be said on the stop entry side. You have a big stop out strategy here. Now we don't know the direction that this went, but we know that the explosion, in other words, the dynamics from this move to this move, if you had the right stops and take targets on that, you made quite a bit of money. So you're making money from a setup like this, from almost zero movement to an explosion. Now that's on the 4-hour chart, so you're really not going to trade a lot on this. The system's not going to run a lot. This is literally insanity here. So like just before that move, you can also draw a trend line on your 1 period ATR. Instead of letting the moving average, like you can picture the moving average on this crap would be like, oh, hey, ATR is kind of low. I don't even know why you're smoothing this shit out. Like, who's smoothing out their indicators? If I could run, this is RSI of 1 on the top. Like, if you run a 3-period RSI, so RSI, if you add this on here. Now here's the only way to run RSI. Here's another way to do it. Of course, you got to realize RSI is a leading indicator, so you're going to kind of be ahead of the market. So you're going to get divergence, and then it's going to fail, and then you're going to, so when divergence fails, that's actually your huge way to get in. So I'm going to put a RSI of 3 on here, because if you put it on 2, it just looks like Williams percent R. It just goes up and down. And then let me get rid of my take this ATR down a little bit. So here's how you would run RSI: is you're certainly looking for divergence, but when divergence fails, okay, Here's a 3-period RSI. Now, the reason why I pick 3-period because I can make it steeper. So I can over-dramatize the thing. So I want to see the high probability entries from a momentum standpoint. And this reversal technique, which they were calling something else. I don't know, these guys over power trading. But this is the setup you're looking for, is this pullback here. Now find this price in the closing price. That's why I'm running closing price. That's where I got the idea of getting rid of the candle. You compare this price to this price, and ideally this is going to be 2 to 5 bars away, but this is your entry, this is your setup. So this is the perfect setup. These don't come very often, and these are huge payouts on the 4 hour, certainly. Big payout here, big cha-ching. So you've got this situation where we're more oversold, but the price is higher, and then you connect these two. So this is the positive reversal. So it's not only a positive reversal, but it's also a pivot. There's a double bottom here. So this is when the markets trap people, and then they go the other way. So by the time and of course, the divergence, there is no divergence on this unless you consider this. So there's not a lot of signals on RSI, but when they set up, they're good. Now this would be where you would look to re-enter at this. This is supposed to be your baseline. And then you're waiting for another reversal to either add or just do another trade. So see the divergence that caused this pullback here? Why does this thing keep jumping? I can't get this to give me the shift. Turn that fucking thing off. Okay, so this is a 4 hour system. RSI, I guess. So you have to drill down like this. You have to fix that scale. The ATR would only matter as far as which script to place and how much you're going to risk. So the sellers, see the ATR is small here at the top, and they've trapped the breakout bots, the volatility players, and this is your divergence right here. So this is what gives you the setup to go long, is a failed divergence. So here's the kind of double top, slightly higher divergence. Everybody sells. They sell in breakouts. 4 hour, they only make it to this last known top, which is this double bottom. And now what you have is, that's why fast pullbacks are the place to get in. Not slow pullbacks are kind of like well, it's going to take longer to show up on this, but this is where everybody's like, uh-oh, because it more oversold quickly, higher price. Now this is going to be where you build your target off of. So if you're going to do a price pulse target, you would take this and cut the line, turn off the ray, and then just, so take this to the bottom. Take this to the bottom. This is your signal or your setup. Now you either had buy limits. See, thing is that you don't even need all this crap, but this is like, I know people love to make sure that their wiper blades work and all that stuff. And this, because you have the top bottom. In the end, all you really need, so after you take the training wheels off, all you really need is this. And then you also need this buy limit sitting at the last known bottom, because this is a better trade entry. Then this is a trend trader entry here. You could still get slammed. So you take this line and you copy this over to the top, the highest high you know. See, the highest known in between these two lines. That's the rule set for RSI. And that's your target. Now it actually blew through the target before it hit it, but on time it hit it. And now you're looking for the next reversal entry. So these are positive reversals because, and this is a price here, even though it's pretty shallow pullback, you notice this correlates to this. So here is another Where's Waldo pullback, higher price again, top bottom, more subtle, more trend trading, more like, okay, we've been up here. And the thing is that you have to wonder why, if we're really going up, what's this all about? Why the big spike up and then, okay, well, you know, at the end of that 4 periods, we drift back to here, and it's like, well, wait a minute, I thought you guys wanted this, I thought everybody's excited about it. Why the big backlash? Well, I think they were tagging the sell limit clusters in here, or the people that bought at the 100-yard line, they were like, uh-oh, and then you get the pullback. But now here is another signal, so you have a triple signal here. Connect all 3 of those. More oversold, higher price, another place to get in. Even the stop bot's got it right here. He's got low ATR. He's getting in on that. Here's another low ATR window. Maybe this is a reversal. I can't see on the top side. You come down here and you're really cherry picking. I'm back testing. In other words, the setup you need to see. You're not going to back test this with money in some fictitious fucking account, because what if the ATR goes to 144 like it did here on the 4 hour, or 89? How are you going to manage that? You're not, because you have to have the limits in there. Yeah, you would have to have it's a combo plate. You can't take a person. That's the problem with these specialist doctors. You can't take somebody. They're like, well, I don't do that. Well, yeah, really? Well, I mean, you cannot go to the hospital with an abscessed tooth, or you can't go to the. There's places you just, well, we don't do that here. See you, bye. So there's always a filter. So then here is one last buy signal on this. So if you take this, and of course you can copy this too, just like you can in the other fractals. You can use this and just trade off RSI. So you have top become bottom here with the reversal. And here's your signal, or your, whatever you want to call it, your pattern. As you're looking, you take this line, and every one of these you're going to copy. Of course, you got all day to do this, I suppose. Since that's your signal, off of this, right, off of that, all roads lead. Another thing nice about our site is all these. It just gives you more of it's a leading indicator of the shoulder, head, shoulder. This is supposed to become resistance, so this is a big pivot. And you can draw a trend line here, and you're looking for a breakout. So you're getting in ahead of the crowd. The only problem is that you may jump the gun. And so you really are, but you can, if you wait for this trade, if you, in other words, you put a trend trading approach to it, and then so you copy, and then you can see your targets. Take this, copy it to the highest known close, there's your target. One more buy signal in here. Connect this to that. Copy this to the highest close within there. There's your target. So the target hit in price, but it didn't hit in the time. It took a long time to get to this price. And that's another indication that, well, you know, it's running out of, this is a last gasp here. And notice the divergence that created the trend trade. So people keep counter trend trading divergence, and that is totally good trade, but you have to go the other way. You can scalp in, you can counter trend scalp, and you can see here the divergence against these two. So yes, people are, and plus you've got a volatility situation. You can trade with the tighter stops. So for a lot of people, 20 pips is like, hey, that's it, 20 pips, I'm out. Now it wouldn't matter if they're trading in a 1K, that's $2, like $2 I'm out, $5 I'm out. Like people pick their threshold up front, and then, you know, if it's 21 pip stops, then you know that here's 3 opportunities to put in less than that. You run tighter stops, but you don't want to have too many filters. Now this was a continuation breakout. This one, your volatility system, there's no RSI signal here. That's probably a little bit overbought here than it is here if you were on a different time frame. And then you just have the good old-fashioned, it can't go sideways, and it's not holding this key floor that we were supposed to hold back here. Here's where they really trap people, but where are they coming back to? They're coming back to this one. Every time, all these past situations matter into the future. Here's your triple top becoming a bottom on the Australian dollar here. A real no-brainer trade in a way, but a real difficult if you're used to trading with X amount of stops. And here was the breakout systems coming in here possibly to make money on this fall out. In other words, if you have the buy limits here and you got your stop bot's like, oh, we're going to make this stupid little breakout trade, and hopefully there's scalps built in. And maybe you've got sell limits up here because you put them at the last known node there. So the market's going from node to node, and this is just 100 pips dead on, classic stupidity trade. Now here we get above the 100, people are like, oh yeah, well this problem is this dead spot here where there's a flag. There's a RSI setup guarantee. There's a 2 to 5 period is the best setup. In other words, 1, 2, 3, 4, 5. This is 6, because those are the quick and dirty moves. And here is your first buy signal on RSI. So if you put RSI on top of it, that's about, like I see a RSI people putting on the screen, but they never show the setups. There's another buy signal. Now this is a long-legged one, but see how it's more oversold, and this a higher price. Now you take and use this as your projection for the targets, and you're gonna have to wait for this target, because the longer leg this is, when you put it on top of the highest close between that, and it could be this one or it could be this one. This one gives you a little bit more conservative projection, because you're looking at the this is the higher close, the highest close, and it's a little bit further out in time. I'm looking for another buy signal. Now here's one, but this looks pretty brutal, like we're at the end of this, but this is where this system isn't going to, you have to be a little suspicious when you see a super steep signal like this, or a setup, or a arrangement. More oversold, and higher price. And this is a lofty projection because this is like, wow, this thing's really, you're looking to get it back to here. But it's just naturally back to this price anyway. So it all lines up. There's no, you don't really have to do, I think you can see the sellers came in here for the scalp on the 4 hour, like we've been up there, and they came in and sold it. So if you wanted to sell this thing, you're looking for the RSI would have come up to here. This would have zigzagged up to here, and this is the lower price, and this is your, we haven't quite rolled over on this, but maybe this whole series of movements is over. Now we're going to go into a different phase. So if you look at the last known broad-based pullback, those are the kind of quick and dirty trades. But if you're looking for the long view, you're going to pick this internal. So you're here now at the more oversold, higher price, and you're going to find those two places on the chart. And cue that up. That should hold as your support now into the future. We should be, we could still pull back to that. But just in terms of trading, most people have buy limits here if they want to buy again, or buy limits down there. Here it's like there's really nothing. I guess there's actually divergence, and sometimes if you see divergence like this, right now there actually is a bullish divergence for the moment. This is less oversold, and when you get divergence in an uptrend, that's pretty good. If you ever see that, where the market you're actually getting a signal to go long on kind of a long-term uptrend. If you zoom out and you go back to see if I can look for a spot here where you see divergence in the well, you're looking for a divergence that, I guess if you're in it'd be like if the big picture is down here, on the dailies are down, and you see divergence in the direction of your trend like this, that's the big trade, because divergence, time to sell. And if you go to the daily, I'm sure it's in a downtrend. Let me just zoom out enough to I guess I don't have enough data loaded into this system, but I'm sure people are saying, oh, it's in a downtrend, whatever. And then, of course, on the dailies, there's not as many setups. But here's a nice divergence on the daily. This looks like a easy situation. Just crashed my platform there. This is your divergence. Should be pretty easy to see. Here's your reversal entry to load the wagon in the direction of the trend. More overbought, lower price slightly, project off of here. You certainly blew through that projection. And no divergence to give you an indication to get in here, and a 3-period RSI is not going to give you divergence. Then nothing is. There isn't anything on the planet that's going to help you out there. So if you were looking for setups here, here's a juicy setup, but once again, right there, there's your buy entry. Problem is, big smash back. That's the sell. Not even divergence here, but look at this sell-off. So I'm sure on another time frame, here's a double top divergence. That's a good, no, but here's just the good old structure. Bottom becomes the top. So now everybody's going to buy here on pullbacks. Here's the trap. And Once again, people have been tricked. And now we're pulling back off of this. And you could also do trend line on the double top here, looking for RSI to come back to that. So you just need a reason to trade, that's all. People just need a reason. Here's a sell. So here's your sell, and if you carry that out to here, that looks like a good place to get in. But horizontally speaking, it's always going to be here. This is the big pivot that went all the way back in space. And everybody has a big battle at that zone. Here's the other battle zone. So this would be a place I'd just put all my buy limits in next week here for the trade the bounce mostly. I just watched the video where the guy's just like, you know what, just trade the bounce. I'm like, yeah, of course. Why in the hell would you want to try to, I guess this big thing about, well, I know where the market's going in the long run. Well, okay. And look at this. Now here's a juicy entry on RSI. Look at this setup. For the love of Pete. Man. So once you are scanning for this kind of, and this is great because it's plunging so hard, and how do you know this is a good signal is because going into that, you had the divergence where the counter trend traders came in on this divergence, and they did pretty good. And I think when the market gets heated up, there's a chance to counter trend trade it and realize that, listen, I'm going to trend trade it. If you're making money from counter trend trading, you're like, if it's not broken, don't fix it. But you can jump in there and just, I know it's obviously these divergences here are going to give you that dead cat bounce. And so right on here you got the lower, and then it sets you up for not only a top bottom, and this is where everybody's in on this because, well, just like I said, you don't need RSI, and everybody's in on that. And then this is the reversal. It's moreover bought, lower price. Now you take that and you project you find the lowest close within there, and take that down to here. That's your projection for price. It gets there before in time. So I can't say it's precisely a good timing thing, but it's supposed to give you the like this is just panic because people that bought this low thinking this was going to hold are freaking out. I don't think it's any different. And if anybody's ever built one of these so-called mysterious algorithms, all you're doing is taking all your good and bad trading techniques and loading them to computers. So it's funny because the first time if you've ever programmed, you ever written something, you're like, well, I've just done nothing more than taken and automated my bad trading. That's all you've really done. And of course there's people that are freaking out on the good old streets, or whatever deals are being made, and really the market's just probably going to retrace at some point. And it's probably going to continue at some point. This dead cat bounce here, and then you just have this once again. Now, if you trade this at the end of the day, this is at the end of the day, I don't know if it went any higher after that or what, but people are picking up on limits up in here too. They're trying to sell on limits in this whole zone here. Maybe they have a stop up here, but man, that's an amazing move. And then there's a little divergence here, and I'm sure there's divergence here that caused that. But here's your, once again, all over again on closing prices. And trend line's about to break. I remember watching markets drop like this and thinking, as long as you size it appropriately. So say you started buying the new low here And everybody's so bearish, like, you cannot imagine the news. This is 1 month from here to here. And look how they trap them. And this becomes a water table for the refeeding. Incredible. No real divergence here, although this is so parabolic, RSI is not going to be up. So there's no perfect. But you can see all stuff just comes together. And the stuff that people see in RSI shows up because of the way momentum behaves in a dynamic situation. It's just a crazy market. Here's a nice triple divergence right there. I almost got a reversal off of that first divergence here. But here's the failed reversal. People are taking signals off of that. Trend continuation. It's like, oh, we broke out, we're going up. It's like, uh-oh. There's a lot of uh-oh moments here. But they may have to pull this back to fair value one last time. Anyways, it's the RSI ATR update.